the more likelihood is the next $1,000 move in gold. And I'm not saying it's going to 3,500, but I think gold had more of a chance of being 3,500 than it does having being 1,500 again. Ever concerns we have politically and socially got 10 times worse, because that would be one of the main driving factors for that. What I will just say to you, what I said earlier, I think the risk reward now is becoming more balanced. It was all reward. That's why we're so aggressive in them. But like I said, the next 20% still looks up, not down. And I would think silver for numbers 35, 40. I'll feel good when gold hits. Listen, it's 10 years.
Gold prices hovered near a record peak in the previous session on Tuesday as the dollar maintained its strength. Despite this, gold remained steady above the $2,400 level, supported by safe haven demand and expectations of U.S. interest rates easing later this year. Renowned financial analyst PeterGrandich of PeterGrandich and Company foresees a greater likelihood of gold reaching $3,500 than dropping to $1,500. He attributes this forecast to political and social uncertainties, driving investors towards gold as a safe haven. Grandich is equally bullish on silver, setting price targets between $35 and $40, driven by similar macroeconomic and geopolitical factors. Market experts echo Grandich's sentiment, predicting an imminent rally. Gold is likely to breach the $2,500 level soon, and if the positive momentum persists, this milestone could be reached within a month. Grandich emphasizes the importance of monitoring the robust demand for physical gold in Asia, particularly China. As long as this demand remains strong, the gold market is expected to remain resilient. Furthermore, gold is enjoying significant bullish sentiment in the markets, fueled by accumulation from retail investors, institutional funds, and central banks of developing countries. This collective demand is contributing to upward pressure on prices. Grandich highlights the forthcoming meeting of BRICS countries this fall, signaling increasing discussions about broader international involvement. While the specifics of their plans remain undisclosed, the participation of additional nations could significantly impact global economic and financial structures. In line with this, Chinese President Xi Jinping is slated to meet his Russian counterpart Vladimir Putin in Kazakhstan in July, as confirmed by Russia's top diplomat during discussions with China's foreign minister on Monday. This upcoming meeting underscores the growing cooperation between China and Russia, which could further shape the dynamics of the global gold market. Join us as we delve into PeterGrandich's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
We know that the BRICS are again meeting this fall. There's more and more talk that there's be a lot more involvement of countries. And I think we're going to learn some more about how they plan on doing all this. Whether it's everything that's going to come out, probably not. But all these things play into a role of why the physical market, and that's another important point we talked about at the onset, and let's not lose sight of it. It's not a coincidence that when the paper market moved out of London and New York as the only places and dominated the value put on gold each day and moved to the east, especially Shanghai, that has also led to less raids or whatever people want to term it all. In the last couple of weeks, because you watch it closely like I do intraday, we saw moves where it would suddenly fall $20 or $30. And in the old days, not only would that go, but it would go lower, and it would take days or weeks to rebound. It rebounded in a few minutes. If I'm one of those shorters, if they still exist out there, and if they're still able to breathe because they've been crushed if they stayed in this, I'm thinking maybe the time has passed. It may be something for me to look some other place, because I don't think they have the influence that they have anymore. And that is another key factor, because you and I knew for a lot of years, you've been in the business, your family, Miles Franklin, been around a long time. We saw when paper markets were getting crushed, people were just, can I get more gold? It didn't match what was happening. And that was an important part to take out, because that's been a fear of some people. Oh, I don't want to get, because they always come and hammer it. And there's still going to be people saying that. But we're seeing that even when they try now, they just don't have the effect that they once had. Well, your counterpart in China would be saying the opposite. They can't keep it in stock, and that's the reason, okay? And now you have to ask yourself, who's going to end up being the smarter person, the person in China or the retail person here? That answer is yet to be seen. But I would tell you that with all the things that you and I discuss and other things we can, the more likelihood is the next $1,000 move in gold. And I'm not saying it's going to 3,500, but I think gold had more of a chance of being 3,500 than it does having being 1,500 again. And so if people are selling, and don't get me wrong, I have people that bought gold as low as 12 or 1,300. And when it got to 2,400 and all, I said, listen, there's nothing wrong with taking 5 up to 25%. The good news for them is it was, hey, listen, take it and put it in copper. And some that did it, they're retiring now. Of course, I didn't do it. I don't follow my own advice, but people that did very, very well. So it's okay. You know, I know that people saying, well, this is very suspicious. Why aren't the gold funds and all? Well, listen, that's all part of how people miss major bull markets and eventually cave in at the end. Quite frankly, because it's been this way, Elijah, I would start to get nervous if you were telling me here, Pete, in the last 2 weeks, they're knocking. I can't even wake up. They're outside knocking on the door wanting to get some. We'd be closer to the end of the move. So I'm not concerned about U.S. or North American based. I'd be very concerned if we start to see a significant drop off out of Asia and China for physical bullion, which hasn't occurred.
Grandich notes that Russia and China align more closely due to mutual interests, particularly against rising tensions with the U.S. This alignment influences their economic and strategic decisions, including their approach to gold reserves. Recently, the price of gold reached a record high, while silver hit its highest level since 2012. This surge is driven by increasing demand from China and broader geopolitical tensions, which have pushed safe haven metals to new heights. While U.S. interest rates traditionally impact gold prices, the recent surge is primarily due to strong consumption in China. Limited investment options in China have increased demand for gold as households and investors seek safety amid challenges in the property sector, stock markets, and currency devaluation. This trend has contributed to record-high gold prices. China's central bank has been consistently purchasing gold to diversify its reserves and hedge against currency depreciation, although the pace of these purchases slowed in April. Grandich also highlights that retail investors in China are significantly driving the demand for physical gold. Unlike in the U.S., where savings and real estate are more traditionally valued, Chinese investors are increasingly turning to gold. This shift has resulted in higher premiums for gold in China compared to the U.S. Let's get back to the interview.
I just think the Russian, you can say they were enemies or still enemies, but your enemy of your enemy is your friend. And I think that's at least as Russia and China looks at it, and the U.S. is person out. I don't want to get into this. It's always been, and there's a few people that will spend all day on it talking about, does the United States still have all the gold that it's had and so forth and so on. Whether it does or doesn't, American citizens don't look at gold the same as we're seeing right now in China. Listen, one of the big things that's also driving China's accumulation is retail investors. Retail investors who might have otherwise had been counted on their savings or real estate in China have just overrun the physical demand. That's why there's such a premium over there versus here. And obviously, they're not there for a trade either. This is second nature to them. Americans are still paper. Let's take a flyer. The markets can never fail. The Fed just steps in and we'll all live happily ever after. But I think the people that are accumulating the gold not only see the world problems, but they see more and more problems in the U.S. I mean, it's getting listen, I don't normally get involved in politics, but I think this warrants it because of the topic we're talking about. If I'm sitting somewhere outside the United States and I'm watching this president now who's getting to the point where every sentence or two he says is misguided, misquoted, doesn't know where he's walking, doesn't know where he's talking. And then when I look what's in the bullpen, meaning who would replace him right now if something happened, I think I would want to own some gold too. I mean, it's really, really concerning. And that's not because I'm a Trumpster. Everybody thinks as soon as you say that, it's because you want to see Trump win. I'm just looking at what we have to deal with. And I think quietly behind the scenes, especially how we double-faced ourselves with Israel, that if you're a so-called ally of the United States, you have to ask yourself, Are we next? Are we the next to be thrown under the bus? How we left Afghanistan, how we said one way one day about Israel, the next day we're saying this and all. It's very, very, I think this is the best way to put it. Up until a couple of years ago, the financial service industry in the United States, especially those without the gray hair or no hair, paid little regard to geopolitics. They didn't think it had or will have any impact on the financial arena. That is clearly not the case, and it's going to play more and more of an impact on us. And again, I'll just point out to the fact that more and more countries around the world are looking to move away from the United States and the US dollar and everything that we say and do is not a bullish factor for US markets if you're someone that still invests for years and not hours, days, and weeks.
Looking ahead to the upcoming meeting of BRICS countries and the scheduled meeting between Chinese President Xi Jinping and Russian President Vladimir Putin, how might the growing cooperation between China and Russia impact the dynamics of the global gold market? And what potential implications could this have for international economic and financial structures? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.